Are you tired of second-guessing every trade, despite having a solid strategy? That nagging doubt, that fear of failure, it's holding you back from exponential gains. This isn't about new indicators, it's about shifting your mindset from a mere 1% hope to an unshakable 1000% belief, finally unlocking your true trading potential. Get ready to rewire your brain for consistent success. Most traders enter the market with excitement and hope, but what they actually experience in the beginning is confusion, pressure, and emotional overload. Charts move fast, opinions come from everywhere, and every candle feels like it's testing their intelligence and patience. Early losses don't just hit the account, they hit the mind. One bad trade turns into self-doubt, two bad trades turn into fear, and very quickly the brain starts associating trading with pain. This is where the genesis of doubt begins. It's not dramatic, it's subtle. A small hesitation before clicking buy, a tight stop because you're scared, closing a winning trade too early because you don't trust yourself. These moments feel normal, but they are silently shaping your belief system. The brain is a learning machine, and it learns fastest through emotion. When fear and stress dominate your early trading experience, your brain records one message very clearly: trading is dangerous. From that point on, every decision is filtered through self-protection, not logic. This is why most traders keep repeating the same mistakes even after learning new strategies. The problem was never lack of information. It was the emotional conditioning that happened without their awareness. Cognitive biases start locking in. Loss aversion makes you afraid to let trades breathe. Recency bias makes the last loss feel more important than your entire trading plan. Confirmation bias pushes you to see what you want, not what is real. Over time, these biases don't just affect decisions, they affect identity. You start thinking, maybe I'm not good at this, maybe trading works for others but not for me. That belief becomes the background noise of every trade. Most traders respond by trying harder. More screen time, more indicators, more strategies, more YouTube videos. But this usually makes things worse. More exposure without emotional control deepens the belief deficit. Every loss reinforces the story that you can't trust yourself. The brain strengthens the fear pathways because they are being activated again and again. This is why effort alone doesn't fix trading. You can't outwork a broken belief system. The market doesn't reward effort, it rewards execution, and execution depends on mental clarity. When doubt is present, the mind is split. One part wants to follow the plan, the other wants to avoid pain. That internal conflict drains focus and creates impulsive behavior. You might enter late, exit early, move stops, or skip good setups entirely. Then comes regret, and regret feeds the doubt loop even more. This cycle explains why so many traders feel stuck for years, not improving despite experience. They are operating from a mindset formed in their earliest emotional encounters with loss. Understanding this is critical because it removes self-blame. You're not weak, lazy, or incapable. You're conditioned. And anything that is conditioned can be reconditioned. But before belief can be rebuilt, it has to be exposed. You must see how doubt was installed. Not assume it's just your personality. The market didn't just test your strategy, it trained your nervous system. Every time you reacted emotionally, your brain learned that reaction. Every time you broke a rule to feel safe, your brain rewarded avoidance. This is how self-sabotage becomes automatic. It's not a conscious choice. It's a habit loop. Most traders never identify this stage, so they keep searching for external solutions to an internal problem. That's why the genesis of doubt is the most important phase to understand. It's the root. If you don't address the root, every new strategy will be filtered through the same fear-based lens. Once you see this clearly, something powerful happens. The struggle stops feeling mysterious. Your past mistakes start making sense. And for the first time, you realize that the path forward isn't about predicting the market better. It's about retraining how your mind responds to uncertainty. This awareness alone creates a shift because belief begins with understanding. You can't build confidence on top of confusion. You build it on clarity, and clarity starts by recognizing that doubt was learned, not born. The reason your brain fights you in trading has nothing to do with intelligence or discipline, and everything to do with survival wiring that has not been updated for modern markets. The human brain evolved to keep you alive, not to help you perform under financial risk. When money is on the line, the brain treats uncertainty as danger, and danger activates emotional systems far faster than rational thought. The moment a trade goes against you, even slightly, your nervous system reacts before logic has a chance to intervene. This reaction is controlled by the amygdala, the part of the brain responsible for threat detection. It does not care about probabilities, edge, or long-term expectancy. It only cares about stopping pain immediately. Logic and planning live in the prefrontal cortex, but this area works slower and requires calm conditions to function properly. In trading, conditions are rarely calm. Price moves quickly, outcomes are uncertain, and the emotional weight of money amplifies everything. Without training, fear will always speak louder than logic. This is why traders know what they should do, but do something completely different at the moment. The brain hijacks decision-making to protect you, even if that protection destroys profitability. This is not a flaw, it is a feature of human biology. The problem is that most traders never retrain this system, so it keeps firing the same fear response again and again. Every loss strengthens the emotional memory associated with danger. The brain does not remember trades as numbers, it remembers them as experiences. If those experiences are stressful, the brain labels trading as unsafe. Once that label exists, the body reacts automatically. Heart rate increases, breathing becomes shallow, muscles tense, and focus narrows. In this state, the prefrontal cortex is partially offline. You are no longer executing a plan, you are reacting. This is why overtrading, revenge trading, and premature exits feel uncontrollable in the moment. The behavior is driven by physiology, not willpower. Trying to force discipline without addressing this is like trying to think your way out of panic. It rarely works. Another layer of this battle is chemical. Every decision you make releases neurochemicals that shape future behavior. When you avoid a loss by exiting early, your brain releases relief. That relief feels good, and the brain learns that avoiding discomfort is rewarding. Over time, this creates a self-sabotage loop. You are training yourself to escape uncertainty instead of sitting through it. On the other side, when you follow your plan calmly, even if the trade loses, you build a different chemical association. You teach your brain that discipline is safe. Most traders accidentally reinforce the wrong behaviors because they judge themselves based on outcome, not execution. The brain does not care if a trade was correct according to the plan, it only remembers how it made you feel. This is why emotional reactions become habits. The more often a neural pathway is used, the stronger it becomes. Fear pathways get stronger through repetition, just like confidence pathways do. If fear is repeated daily, it becomes automatic. This explains why simply knowing the psychology of trading does not fix it. Awareness without practice does not rewire neural circuits. Change only happens through repeated, controlled experience. When traders hear this, they often ask why more screen time doesn't help. The answer is simple. Unstructured exposure under stress makes the brain more sensitive, not more confident. More trades taken in fear reinforce fear. More hours spent watching price without emotional control increases reactivity. This is why burnout is common. The nervous system never gets relief, and the brain stays in survival mode. To move forward, this must be understood deeply. The market is not attacking you, but your brain believes it is. Until you teach your nervous system that uncertainty is not danger, logic will never stay in control long enough to produce consistency. This is the turning point most traders miss. They try to build skill on top of an untrained nervous system. Elite traders do the opposite. They first train emotional regulation, then execution becomes natural. When the brain feels safe, clarity returns, decisions slow down, focus widens, and rules are followed without force. This is the foundation of real confidence, not hype, not motivation, but biological calm under pressure. Once this is in place, belief stops being something you try to feel and starts becoming something your body accepts as normal. The reason your brain fights you in trading has nothing to do with intelligence, motivation, or discipline, and everything to do with how human biology responds to uncertainty and risk. The brain was never designed for modern financial markets. It evolved to keep you alive in environments where danger was physical, immediate, and visible. In those conditions, hesitation could mean death, so the brain learned to react instantly to anything uncertain. Trading activates this same survival system. When money is on the line, your brain interprets potential loss as a threat, even though nothing physical is actually happening. This threat response is automatic and unconscious. The moment price moves against your position, the amygdala fires. This part of the brain acts like an alarm system. It does not analyze data, probability, or long-term edge. It only asks one question: is this dangerous right now? If the answer feels like yes, it triggers fear, stress, and urgency. Logic lives in the prefrontal cortex, the part of the brain responsible for planning, reasoning, and self-control. But the prefrontal cortex works slowly and requires emotional stability to function well. Under stress, it gets overridden. This is why traders often say, "I knew what to do, but I couldn't do it." In that moment, knowledge is not gone, it is inaccessible. Fear is louder than logic. This is not a personal failure, it is a neurological response. Every time this happens, the brain strengthens the connection between trading and danger. Emotional memory is far more powerful than intellectual memory. The brain does not remember charts and rules, it remembers how an experience made you feel. Early losses, sudden drawdowns, and unexpected volatility leave a deep emotional imprint. Over time, your nervous system begins to anticipate pain before it happens. This anticipation creates tension even before you enter a trade. You may feel it as hesitation, tightness in the chest, shallow breathing, or mental fog. These are signs that your body is already in protection mode. Once this state is active, decision-making quality drops sharply. You become reactive instead of deliberate. You exit winners early to lock in relief. You hold losers too long hoping to avoid the pain of accepting loss. You break rules not because you want to, but because your brain is trying to escape discomfort. This is why willpower alone never solves trading psychology. You cannot think your way out of a biological response. Another critical layer of this process is neurochemistry. The brain constantly reinforces behavior through chemical rewards and punishments. When you avoid pain, the brain releases relief chemicals. Relief feels good even if it comes from a bad decision. For example, cutting a trade early because you are scared gives instant relief. That relief trains your brain to repeat the behavior. Over time, avoiding discomfort becomes the default response. On the other hand, following your plan through uncertainty often feels uncomfortable in the short term, even if it is correct. If discomfort is not properly reframed, the brain labels discipline as unsafe. This is how traders unknowingly train themselves into self-sabotage. They reward emotional decisions and punish disciplined ones without realizing it. Most traders measure success only by profit and loss. The brain measures success by emotional outcome. This mismatch creates long-term problems. A losing trade executed perfectly can still feel bad emotionally, while a winning trade executed poorly can feel good. If you are not careful, your brain will learn the wrong lesson. It will associate breaking rules with pleasure and following rules with pain. This is why consistency collapses under pressure. The neural pathways that fire most often become dominant. Fear-based pathways grow stronger through repetition, just like muscles grow through use. If fear is activated daily, it becomes automatic. Confidence works the same way, but most traders never train it deliberately. More screen time does not fix this. In fact, uncontrolled exposure often makes it worse. Watching charts for hours while emotionally reactive keeps the nervous system in a constant state of alert. This trains hypervigilance, not mastery. The brain becomes more sensitive to every tick, every candle, every fluctuation. Instead of building trust, it builds anxiety. This is why burnout is so common in trading. The nervous system never recovers. Without recovery, clarity disappears. Traders then assume they need more knowledge, more indicators, or a new strategy. But the real issue is that their brain is stuck in survival mode. Until that changes, no strategy will perform consistently. Understanding this changes everything. It removes self-judgment and replaces it with awareness. You are not broken. Your brain is doing exactly what it was designed to do. The problem is that it has not been trained for probabilistic environments. Elite traders are not fearless. Their brains have simply learned that uncertainty is not a threat. Through controlled exposure, emotional regulation, and repetition, they teach their nervous system to stay calm under pressure. When the body is calm, the prefrontal cortex stays online. Decisions become slower, cleaner, and more deliberate. Rules are followed without force. Execution becomes automatic, not because of discipline, but because there is no internal conflict. This is the real foundation of confidence. Confidence is not hype or motivation. It is a biological familiarity with uncertainty. When the brain no longer interprets market movement as danger, belief stabilizes. Doubt fades not because you convince yourself, but because your nervous system stops sounding the alarm. This is the shift that separates struggling traders from consistent ones. Before belief can grow, fear must be neutralized. And fear is not eliminated by thinking differently, but by training the brain to feel safe while doing the right thing repeatedly. Belief does not explode overnight, and it does not arrive through motivation, positive thinking, or a single breakthrough trade. The shift from fragile confidence to powerful conviction begins quietly, almost invisibly, with what can be called the 1% catalyst. This is the moment when your relationship with trading starts to change, not because the market suddenly rewards you, but because you begin to trust your own process. Most traders wait for belief to appear before they act with discipline, but elite traders understand the opposite truth. Discipline comes first, belief follows. The 1% catalyst is not about winning big, it is about proving to your brain that you can follow rules under pressure. This is a critical distinction. The brain does not care about your intentions, it cares about evidence. Every time you execute your plan correctly, regardless of outcome, you give your brain proof that you are capable of control. That proof is the seed of belief. At first, it is small. It does not feel like confidence. It feels like stability. You take a trade and accept the risk without emotional negotiation. You let the stop get hit without interference. You exit according to your rules instead of your feelings. These moments may seem insignificant, but neurologically they are massive. They interrupt the old fear-based pattern and introduce a new one. The brain begins to register a different experience of trading, one where uncertainty does not automatically equal danger. This is the beginning of the belief shift. Many traders miss this because they are focused only on profit and loss. They ignore execution quality. But belief is built through consistency, not outcomes. One perfectly executed losing trade does more for long-term confidence than a lucky win. This is because it rewires the reward system. When you start measuring success by discipline instead of money, you change what your brain learns to value. Over time, this creates a powerful internal alignment. Your mind and your plan stop fighting each other. Another important aspect of the 1% catalyst is awareness. You begin to notice your impulses without obeying them. The urge to move a stop, the desire to exit early, the temptation to revenge trade. Instead of acting, you observe. This observation alone weakens the impulse. The brain learns that an urge does not require immediate action. This creates psychological space. In that space, choice becomes possible. Each time you choose discipline over reaction, belief strengthens slightly. This is how confidence actually grows, not through hype, but through repeated self-trust. Elite traders often talk about seeing clearly. This clarity is not mystical. It comes from reduced internal noise. When fear is no longer screaming, perception sharpens. You begin to notice patterns more easily, not because the market changed, but because your mind is calmer. This is where pattern recognition accelerates. The brain is exceptionally good at recognizing structure when it is not under threat. Stress narrows focus, calm expands it. As belief grows, execution becomes smoother. You are no longer forcing yourself to trade. You are simply doing what you plan to do. This is where belief begins to compound. Small wins, both psychological and financial, stack on top of each other. Each disciplined action reinforces the identity of someone who follows through. Identity is the multiplier. Once you start seeing yourself as a disciplined trader, your behavior aligns naturally. You no longer need constant reminders or motivation. You act in accordance with who you believe you are. This is why belief is more powerful than strategy. Strategy tells you what to do. Belief determines whether you actually do it. Scaling belief from 1% to something much larger requires deliberate practice. This does not mean trading more. It means trading with intention. Fewer trades, higher quality execution, clear rules, and post-trade review focused on behavior, not money. Tracking how well you followed your plan trains the brain to value process. Over time, confidence stops being fragile. Losses no longer shatter it because belief is no longer dependent on outcome. Drawdowns become data, not personal failure. This is a major psychological upgrade. When belief reaches this level, fear loses its control. It may still appear, but it no longer dictates action. This is the state where conviction feels natural. You trust your edge, you trust your execution, and most importantly, you trust yourself. This is what allows belief to scale exponentially. It compounds through repetition, emotional regulation, and identity reinforcement. Eventually, belief is no longer something you think about. It becomes the default operating system. Trading feels calm, deliberate, and controlled. At this point, the shift is complete. You are no longer trying to believe. You simply do. Once belief has begun to grow, the next stage is learning how to scale it beyond small wins and into full, unshakable conviction. This is where the process stops being linear and starts compounding. Confidence at 1% can help you follow rules occasionally, but scaling to 100% or even 1,000% requires deliberate practice, repeated exposure, and an understanding of how your brain reinforces behavior. At this stage, every trade becomes an opportunity to strengthen your belief system rather than just an attempt to make money. This mindset transforms losses from fear-inducing events into data points for improvement. When your brain begins to associate discipline with safety and execution with reward, the foundation of exponential belief is laid. One of the key tools in scaling belief is pattern recognition. When you have cultivated calm and consistency, your brain is better able to perceive the market structure. You start to notice opportunities that other traders overlook, not because the market changed, but because your mind is no longer clouded by fear or hesitation. This allows you to make more confident decisions and execute with clarity. Another critical element in scaling belief is deliberate practice. This is not the same as mindless repetition or overtrading. It involves taking trades with specific goals in mind, such as following a plan perfectly, managing risk correctly, or observing emotional responses. After each session, reviewing your execution rather than your profit creates feedback that trains the brain to value process over outcome. Over time, these small adjustments compound, gradually building a belief system that is self-sustaining. Identity plays a major role in this phase. When you consistently act in alignment with disciplined trading behavior, your self-perception begins to shift. You stop thinking of yourself as a trader who struggles or doubts, and start thinking of yourself as someone who executes flawlessly under pressure. This identity alignment reinforces behavior automatically, requiring less conscious effort. The exponential growth of belief also involves learning to manage uncertainty. The brain naturally seeks certainty and resists risk, but in markets, uncertainty is constant. Training your nervous system to tolerate risk without emotional reaction is essential. Controlled exposure, staying in trades according to plan, and observing impulses without acting on them are exercises that teach the brain to accept uncertainty as normal. With each successful repetition, belief compounds. Losses are no longer seen as catastrophic, but as normal variations that do not threaten identity. Gains are celebrated not only financially but psychologically, reinforcing trust in your process. Discipline becomes automatic because the brain associates it with positive outcomes and identity confirmation. One of the most powerful aspects of scaling belief is emotional decoupling from outcomes. By focusing on execution, not profit or loss, the brain stops reacting to the short-term swings of the market. This allows you to maintain calm and consistency, which in turn makes your decisions sharper and more deliberate. Another critical factor is the concept of momentum in belief. Once the brain experiences repeated success in disciplined action, it becomes self-reinforcing. Confidence breeds calm execution produces good results, and good results reinforce the belief system. This cycle accelerates growth exponentially. At this stage, belief is no longer fragile. It no longer depends on a single trade, a lucky streak, or external validation. It is rooted in your repeated experiences, your training, and your identity as a disciplined, capable trader. The next step is integrating this belief into every aspect of trading. You maintain clear rules, manage risk consistently, observe emotions without judgment, and continually refine your process. You stop chasing outcomes and start focusing on execution excellence. This integration ensures that belief does not plateau. By constantly challenging yourself under controlled conditions and reflecting on execution rather than outcome, you create a self-sustaining cycle of growth. Eventually, the brain accepts disciplined execution as the default state. Fear still exists, but it no longer controls behavior. You enter a state where decision-making is deliberate, reactions are measured, and execution is precise. At this point, your trading identity is fully aligned with disciplined action. Belief has scaled to the point where it compounds naturally, producing consistent performance, calm execution, and resilience under pressure. This is the stage where most amateur traders fail to reach, but it is the hallmark of elite performance. Scaling belief is not about motivation, hype, or short-term success. It is about rewiring the brain through repeated, deliberate practice, emotional regulation, identity alignment, and learning to tolerate uncertainty. When executed properly, this process transforms every trader from someone who reacts to fear into someone who acts with conviction, precision, and confidence, setting the foundation for long-term trading mastery. The final stage of belief development is not just about executing trades confidently or recognizing patterns. It is about sustaining unwavering conviction over the long term, even in the face of inevitable losses and market volatility. This is the elite trader mindset, the point at which belief becomes permanent and self-reinforcing. By now, your nervous system has been trained to tolerate uncertainty, your brain has learned that discipline is safe, and your identity as a capable trader has been firmly established. However, sustaining this mindset requires continuous effort and refinement. The brain, while adaptable, also reverts to old patterns under stress. Drawdowns, unexpected market behavior, or emotional fatigue can trigger dormant fear pathways. Elite traders understand this and build anti-fragile mental systems that grow stronger under challenge rather than breaking under pressure. Losses are reframed as opportunities to strengthen belief rather than threats to it. Every setback becomes a controlled experiment in resilience, teaching the brain that execution matters more than immediate results. Daily rituals and mental models are critical to maintaining this state. Simple practices like reviewing trades with an objective mindset, meditating or focusing on breath to regulate stress, journaling emotional reactions, and setting deliberate intentions before each session create consistency in thought and behavior. These small, repeated actions condition the brain to remain calm, alert, and confident, regardless of market conditions. Sustaining unwavering conviction also requires a continuous feedback loop. Instead of obsessing over P&L, elite traders focus on metrics that matter for belief growth, adherence to rules, quality of execution, and emotional response management. By tracking these variables, you reinforce the behaviors that produce consistent results and gradually reduce the emotional weight of losses. Another key component is identity reinforcement. Belief is maintained when your actions align with the self image you have built. You think of yourself not just as a trader who occasionally profits, but as someone who executes flawlessly under pressure, manages risk intelligently, and approaches the market with calm and clarity. This identity becomes a guiding principle, automatically influencing decisions even when conscious thought is limited. Over time, belief becomes so ingrained that it operates below conscious awareness. You no longer have to convince yourself to follow rules or resist fear. The body and mind act in alignment with the disciplined identity you have cultivated. This level of conviction creates a feedback loop that enhances performance. Calm, deliberate actions produce consistent outcomes, which further reinforces belief, which in turn makes execution even smoother. In this state, fear and doubt do not disappear entirely, but they lose their control over behavior. They become signals to observe, not triggers to react. The market no longer dictates your emotional state, your mindset dictates how you respond to the market. Finally, sustaining unwavering conviction is a commitment to continuous evolution. Markets change, personal circumstances change, and psychological triggers can emerge unexpectedly. Elite traders continuously refine their neural pathways, adjust mental models, and expand their tolerance for uncertainty. They remain students of both the market and their own mind. The process is ongoing, but each step compounds the previous gains. Belief, once scaled and sustained, becomes the ultimate leading indicator of success. It transforms trading from a stressful, reactive activity into a deliberate, confident practice. The trader who reaches this stage is no longer chasing profit or struggling with fear. They are executing consistently from a place of mastery, clarity, and unshakable conviction. This is the pinnacle of the journey from 1% belief to 1000% confidence, from hesitation to precision, from fear to disciplined mastery. Every trade is no longer a test of courage, but a demonstration of the mindset that has been deliberately built and continuously strengthened. At this stage, trading success is inevitable because it is not dependent on luck, market conditions, or external validation. It is rooted in a rewired brain, a resilient nervous system, and an identity aligned with disciplined execution. This is the elite trader mindset, and it is available to anyone willing to follow the roadmap, trust the process, and commit to growing belief every day.